Hello and welcome to our viewers on Crux Investor. We're here today with Julian Tapp of Vimy Resources. He's going to talk to us about a bunch of different things, but mainly the WNA Fuel Report. So if you want to look at the various topics, look in the description below, click on the relevant timestamp, and that'll take you to that part of the video. And if you could click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, please click the notification bell. Julian, how are you, sir?
Very good, thank you.
Good to see you here.
Yeah, thanks.
How long have you been over here for?
I arrived on Sunday afternoon.
Right.
So over the jet lag now, just.
Over the jet lag now, and then it'll soon be time to go home.
Yeah.
Brilliant.
Yeah.
What fun. So you've been meeting and greeting lots of people, sort of finding out what the mood is.
Yeah, I mean, everybody turns up for the WNA symposium.
Yeah.
And so, just hang around, talk to people, find out what the views are. Yeah.
And what do you think the general mood is? Positive or negative?
Yeah, look, I think there's a certain amount of optimism. I mean,
always.
I know it might sound odd. Well, no, but the past few reports, every time the WNA report has come out, their forecast has got worse. Right?
So you're talking about the fuel report.
Yeah.
Okay, so let's deal with that. So you've been involved in it.
Yes, I have.
Tell us, what was your role in that?
Well, it's quite interesting. So going back a couple of years, Vimy did a DFS, and I actually built a model to forecast world demand for uranium on a reactor basis.
Yep.
And then I compared that. When I'd finished, I thought, well, I wonder how this compares to what the WNA have done.
Yeah.
And I went and looked at their model, and it's like, we got similar answers in aggregate, but regionally there were big differences.
Right.
Right? And I'm like, oh wow, how on earth did they get these numbers?
Why is that important?
Well, because I think actually their assumptions were wrong.
Right. Okay.
Right. So
that was a couple of years ago.
Yeah. So if you look at this one, you'll see that the forecasts are more, the projections, I should say, are more optimistic.
Right.
They've been raised, particularly the lower scenario. Right.
When you say they've been raised, what has been raised?
The forecast capacity of nuclear reactors operating and using uranium over the next 20 years.
Got it. And why is it better?
Couple of reasons, couple of prominent reasons. Firstly, the assumption used to be that the French were going to reduce their nuclear capacity to meet a 50% of electricity target by 2025. So although the previous report didn't have them getting there by 2025, they were trying. And everybody now recognises Macron's kicked the can down the road. It's 2035.
Yeah.
If you actually listen to what he says, it ain't ever going to happen.
Yeah.
So, but at least so for the pessimistic forecast that they put out there, the lower case scenario used to have them going, losing 20 gigawatts capacity, right?
Yeah.
And that's now not forecast to happen.
Right.
I think the other thing is also in America, there was an expectation that nuclear reactors, when they reach the end of their license life, they won't get extended. And again, we had a lot of discussion about this. I kept saying to them, well, when it gets to the end of its life, it doesn't get an extension if it's not safe. But please tell me who thinks these reactors aren't going to be safe after 40 years? Oh no, they'll be perfectly safe. Well, same argument when they get to 60 years, will they be safe? Now, sometimes you have to spend money to upgrade them to keep them going. Yeah. And if the economics are not good, maybe you wouldn't pay for that upgrading.
Are they safe? Have there been any nuclear incidents?
None. I would say to you, there's never been a nuclear accident that was related to the age of the plant.
Okay,
there are first.
That's semantics. So, have there been incidents? Deaths?
No. Well, not in recent times. We all know. So, but it's interesting you should ask that question.
Right.
So even Fukushima, vast majority of the deaths were nothing to do with the. It's all to do with the tsunami. Now you will see people walking around saying, "Oh, there's been one reported death." Right. Not true.
Right.
Not true.
Okay.
There was a guy who worked at TEPCO who went to the site. He was like a radiation inspector, and he got lung cancer. Right.
Unconnected.
But when you look at the time between when he was exposed and when he got the lung cancer, it was like 2 years. Right.
Okay.
Usually it's 10 years between being exposed to radiation, and the radiation he was exposed to wasn't high enough to trigger that sort of reaction. So,
okay.
So yeah, no, I mean, I mean, a different subject we're talking about, but
Sure.
nuclear reactors are incredibly safe. If you look at the horrible way to talk about it, but you look at the fatalities or deaths per 1,000 terawatt hours produced.
Right.
And in fact, there's a comment in the Nuclear Fuel Report about it that comes from Lancet in 2007, right, where they said, nuclear is safer than any other form of power, 90 deaths per 1,000 terawatt hours. Now, I looked at that number and I'm going, wow, where did they get a number that high from?
Yeah.
Do you know how much electricity is produced a year by nuclear reactors?
Tell me.
About 2,500 terawatt hours.
Right.
So if you're getting 90 deaths per 1,000,
Yeah.
where are all these deaths coming from? Now,
Okay.
sometimes they include Chernobyl in the numbers, but actually I went and found that Lancet article, found out where they got their data from, traced it all back to a French report in 1991 that assumed, that very low levels of radiation spread over a large population would kill a small percentage of those people. The science has moved on from there. That's simply not true.
Okay,
So,
let's not focus on that one because I think that there's too many reference points required to have the conversation. So let's come back to why is the fuel report important for the industry?
look, I think it's important for the industry because, love it or loathe it, it's a reference document that everybody has a copy of it, right?
Right.
Financial community, the utilities, everybody gets a
But
copy of it.
why this year is it more important? Because obviously there've been some changes. It's a little bit more commercial. Is that fair to say?
Yeah, well, I think
I don't necessarily mean in the sense that it's commercial telling you what the nuclear industry is going to do, but it's a little bit more commercial in the sense it's giving people in the industry more information about what's going on.
Yeah, and I would say more rigour in the analysis.
Okay.
So don't get me wrong. When it said it's a little bit more positive,
Yeah.
nobody sat down and said it needs to be a little bit more positive.
Right.
The way the forecasts are done are, literally country by country, reactor by reactor.
Right.
Which one's going to be built, which ones you don't think are going to be built. They're just all added up, and that's the answer, right?
Right. Okay.
So
how do people? I guess by people who buy this thing, it's on everyone's desk. So it's on fund manager desks, institutional investors' desks, all the utilities, everyone who sits on this thing. What's it going to do for them? Is it going to change behaviour, or is it just a kind of, the broad sentiment and things are better? We know the macro story. It's fine. We'll just park that. I've got that. Read the summary and move on.
No, look, I think there's a number of things. The first thing is, since the last fuel report, Cameco have closed MacArthur River, right? They've also shut in Rabbit Lake. There's a few US Langer Heinrich is closed. So there's a new category of what's called idled mines. And you need to pull them out because traditionally when mines were idled, they put them in a basket with kind of reserve projects that might come back at some point in the future.
Yep.
But the dynamics are very different from an idled mine than they are for a reserve project that might get to be developed sometime in the future.
Yeah.
And the economics around them coming back are very different.
Yep.
So most of the idle mines are owned by producers that have other producing assets, right? And
They can afford to.
And roughly 80% of the market is controlled by 3 companies, and they're the 3 companies that have shut production down because the price is unsustainably low. They want the price up, so they have a complete. People say, oh well, they'll turn on this mine when the price gets to a certain
There's
level.
a cost to that.
But
Yeah.
when the price gets to that level, they will have just seen the profit on their existing mine go up a lot.
Yeah.
And what they don't want to do is turn back on supply and see the whole thing collapse again. So they've got a completely different way of looking. They are, and I'm not suggesting that they collude in any way, but it's the nature of economics. You have an oligopoly, and there would be a classic description of oligopoly.
Absolutely.
They're going to look at the other guy and see what he's doing. Right?
Well, we saw recently, with Kazatomprom and Cameco's announcements in the marketplace, there's a little bit of jousting and a little bit of kidology, etc., around what they were saying or what they weren't saying. Early days when I was getting into this uranium space and trying to understand it, because it's not like mining. It is mining, but it's not mining. I was intrigued by this potential control of whether it be, duopolies or or more. How do you use that to your advantage? Because if I was thinking about it, I'm going, a whole bunch of new entrants can come in and ruin things for everyone because it's a big distraction. You've got a bunch of juniors who, quite frankly, can't get money that they need right now. So maybe there's a chance to take some of those out, take some of the competition out, and starve the market in terms of the supply. And you can start affecting pricing. Those three companies can affect pricing. I'm not saying it's a good thing to do or that they're doing it, but they could do that. Why wouldn't you?
Well, look, I would say to you the dynamics will be that they will keep these mines shut until the price gets to a level where they will make the decision, as long as the others haven't broken, right? Because being oligopolists, they'll be watching each other.
But sure, there are going to be smaller players who are significantly advanced. Vimy potentially is one, where you're quick to production. Mike Young's told us earlier, it's potentially 2 years from press go, assuming fully funded, to get into production. You could get back into market before some of these big boys could, demothball some of these operations, surely. Is that a problem?
No, I would say to you, their lead time would be not dissimilar to ours. I mean, they can get back into production in 2 years because that's a problem much faster than that. But they don't want to.
Okay.
Right? Because when the price starts to rise, they'd much rather the price kept rising than they turned on production and killed the rally.
Okay. So next,
but to come to your point, so what about the juniors? Well, when they're looking around, what they do not want to happen is a 10 or a 15 million pound a year mine to get started. Yeah. Right.
Well, that's my next point. We've been told by the past couple of days by some other juniors who are sort of quite close to production, they're 3 years to production. So if you're saying the big boys can get into production for them, they've got no chance. These juniors have got no chance of being funded, have they?
Well, I'm not going to throw stones.
Sure, don't name names, but
no, we'll look at the price. I mean, so if you look at our Vimy's DFS, right?
Yeah.
I mean, I haven't changed my mind since I did the economics behind that.
Sure.
So my conclusion was, these guys will keep the production shuttered till about $60 a pound. And at 60, and let's not discuss whether that's contract or spot price. I mean, just roughly, when they think that £60 is like the sustainable price, they're going to say, if it goes any higher, there's going to be too many entrants into the market, and once they've started, they'll keep going. So my view was the price would get to 60, but not go any higher. Now, every project, you have to look at it and go, well, if I was right...
That's price manipulation, isn't it?
Would they get into the... Well, no, it's not. It's perfectly rational behaviour.
Sure.
Right? You say...
But someone's controlling it.
I'm prepared to keep the supply cut until it gets to a certain point, and it's perfectly rational for me to say, look, if it gets to 70, I don't know, some big project in Tanzania is going to get launched. Yeah. Right? I don't want that to happen. So I'm not going to I'm going to make sure these guys don't get the signal they want. When it gets to 60, hey, I'm making a handsome margin now. I just don't want anybody else coming
That's my
in.
point. Okay, so if I'm one of these junior companies and I'm going out trying to raise money and I'm talking to the institutions and they're cognizant that this could happen, I'm not going to invest I'm not going to find institutional investors to give me the money I need because it's not in my control. The pricing is being controlled at $60, is what you're saying.
Yes, but bear in mind that also that for somebody like Vimy, I mean, in order to get finance, we have to be writing some contracts. We're talking about long-term contracts. Once you've signed those long-term contracts, you are now...
So I want to be really clear, I wasn't talking about Vimy. I'm talking about some companies who are in a similar position to you but have got a longer lead time, which I think potentially could cause problems. So I'm talking about, I want to understand what winners and losers, what the factors are around that. Okay, so that's what I'm kind of getting at.
Yeah, the longer your lead time, it's more problematic. It's not just because idle production could get in, but when you have a very long lead time, it's more problematic in being able to write. So we're in a position where we want to write contracts with utilities, and you've got to write the contract and then go into production. Yeah. The longer that window into production is, the more risky you're going to be perceived to be to them, and the less willing they're going to be to write contracts with you, right?
Vicious circle.
Yeah. So being 2 years away from production, it'd be much better if we could be 1 year away, right? But 2 years is fine, because on most long-term contracts, deliveries aren't normally for a couple of years.
Right.
So we're in that window now where we know the utilities are looking for deliveries 2022, 2021, 2022, sometimes even 2023 for the beginning date.
Okay, let's come back to the report, because the question I asked was, what is the commercial use of that? When people buy that, read that, what are they thinking and doing? And what I'm hearing is the sentiment is positive, but it's not going to give people necessarily the commercial data they need to make a decision in its own. So do you think the WNA needs to rethink the way that the report's being constructed again?
Yeah.
Are you happy with the structure of it?
No, yes.
Right.
Look, and look, I don't think it's any surprise to anybody. Everybody would like to see some discussion around price.
Yeah.
Price put into the dynamic. So, from my point, I don't understand. So anti-competitive guidelines, nobody wants to sit down and agree what the price is going to be, which is what the guidelines are designed to stop you doing.
Yeah.
It doesn't seem to me sensible that you can't have a discussion with people about, let's say, well, what happens if the price stays at today's level for forever?
Yeah.
I mean, that's how people do it with things, economic forecasts they don't know.
Sure.
Oh, let's just assume the exchange rate stays forever.
Fine, yeah.
What does it mean? What happens? What interest rate shall I use? Well, let's just leave it at the current level and see what the model says going forward. So there's no reason why they shouldn't put a price in, say, today's price, 25 spot price, $25.30 a pound. Run that out for the next 20 years. What does that do? That shows you a really interesting picture, because basically supply goes over a cliff and never comes back.
Yeah.
Right. So now I don't know there's a higher price that would be sensible. Maybe 50, maybe 60. Run the assumption again.
Yeah.
Oh, you're still a bit short. Right. And then the message, and that's the message that doesn't really come across at the moment, is there's basically a problem coming.
So again, I'm fascinated, because if I look at people like Trade Tech or UXC in terms of the data which they gather and they put together and the reports that they put out, compared to the WNA, it seems a bit more robust. A bit more goes into it, and they do talk about price. They need to, and they do it on a company, country, industry basis. If WNA needs to up its game, it seems to me. If it wants to be a kind of commercial, it is a kind of commercial venture, right? So what I'm hearing and seeing, and it's not just you, other people have spoken to about this one, this report needs to do more, doesn't it?
I think there's measures to try to see what extra can be injected in it for next time round.
Right.
I mean, this was an improvement on last time. I think there are various people who would like to see some pricing brought into it some way. I mean, you'd be smart. You don't have to sit and agree what you think the price is going to be. As I said to you, you can use different price decks and show the impacts. Yeah, okay. And to get, better understanding. So what you've got now in the forecast is this unspecified supply, and nobody makes a judgment on who's going to come into it, because you can't without some sort of price assumption.
Yeah. Okay.
But some of those are sitting at $80 a pound. And
well, let's see how it's been. Let's see how it's going to be received. We'll know in the next couple of weeks what people are thinking. We get that feedback. Just finish off on Vimy. You're working there with Mike.
Yep.
Things going well?
Oh, yeah, very well.
Confident?
Well, when the price gets up, I'm sure we'll be the first.
And you think that's the only thing that the company can affect is, it can't affect the price, but you think there's anything that the company can affect to help the share price, or do you think we'll just wait for the price?
Look, there's not much more we can do with the Mulga Rock project that can affect the share price.
Okay.
I mean, so we're going through the final stages of getting all the secondary approvals ready. Yep. But I mean, that's not regarded as a job stopper. So when we've got them, I'm not expecting a big uplift. Oh, you've got your secondary approvals. Yeah. What else? So the area, I mean, Angularli, where and the Northern Territory stuff. We found a kind of what Mike would call a big haystack. Yeah. Bigger than we thought it was, the haystack. And we think there are some valuable needles in there, and we'll continue to look for them. Okay. Thank you very much for your time, sir. Thank you. Really appreciate that insight into the WNA Fuel Report. Fascinating what's happening in the industry at the moment. And I like speaking to an economist. You look at it differently from everyone else, which is really special. Special insight. But stay in touch. Let's see what happens with Vimy over the next few months. Yeah, good.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.